So, Club Dividend Detective officially opens this session of discussions and debates. With us is our health professional Ray Dragunas, the retirement practitioner Scott Quist, the banker Dan Novak, and the discount doctor me, Yuri Kotik. Today is June the 2nd. We're gonna have some fun on this Simplify Money Show on Monday. And I suggest a new format where we are going to move counterclockwise as true contrarians. And Ray had a suggestion on something big and beautiful for us to discuss today. So over to you, Mr. Dividend Detective.
Yeah, I think the topic of the moment right now is the big, beautiful bill that's going to be passing through the Senate. Congress has approved it with no modifications from what I understand. So I guess the biggest challenge from what I see is the taxation of income paid to foreign entities from the US. So in Canada, we have a tax treaty whereby 15% is withheld, and then you have a credit here on the Canadian side. But within registered pension plans, RIFs, RSPs, and even places like CPPIB, investment board, this is where we're going to possibly have a tax on U.S. situs assets at the highest levels, which we enjoyed a very big tax treaty. So I was just going to ask Dan, with his experience at the Bank of Canada, what his thoughts around that, because the way I see it is this is going to increase the cost of capital for U.S., not only the U.S. government, but also U.S. corporations, and then anyone seeking access to the U.S. market to list there. It's just, I think it's just to me, it seems like a train wreck. I could be wrong, but let's hear Dan's opinion on that.
Dan will definitely have an opinion, but because it affects so many retail investors, and we have Scott, let's move counterclockwise. Scott will say what he thinks, and then we'll barge in.
I'll actually allow it to move on, because I kind of lost in that space. Got some ideas, but move on to Dan.
So by default.
Yeah, okay. So first of all, I think that Trump uses tariffs the same way the British Empire used the Royal Navy. Like, they're not trying to go through with it, but they're good for pushing other countries around to get what you want. So I don't think that Trump's going to go through with this. I think they'll probably come to some agreement. And I think basically the US market is going to call up Trump or call up maybe Bessent and go, this is crazy. It's going to increase our cost of capital. If they're talking about interest income, like, that's bonds, and that's the Treasury would be complaining about the cost of funding the government, which would be like, it's a huge own goal. They do much more damage to themselves than they do to the foreign investor. Like, the foreign investor, like, they can just sell their holdings before the tax hits, because dividends are on interest are ongoing, but they can just sell it and they move to their home market or another market, so on. Like, yes, like, it's like, it takes away some options of things I might want to invest in, but the damage really would be to the US market and the US capital market. That's my initial take on that.
Yeah. To that point, obviously who cares about, everybody likes equity markets because it's sexy, but obviously credit rules the day. It's the boss, new boss, the same as the old boss. And I think your point on using it as leverage is very correct. Do you see this as maybe his way to pry open the Canadian financial space, like opening up the Canadian financials to US banking? And I'm not talking at the corporate level, but I'm talking at retail level, where banks have been enjoying like north of 20%, like close to 22, 24% ROE versus the normalized on the US side is more like 18. So they want to get in. They want in on some of this action, I think.
Yeah, I mean, I think there's some US banks that would like access to the Canadian market, but then they have to play by Canadian bank rules. And one of the rules is you have to raise your capital in Canada. And this is an issue for some of the American banks who the funding model doesn't work. They get much better funding out of the US. So they look at the cost of capital. So they're already at like a natural disadvantage to the Canadian banks. And also Canadians, there's a patriotic effect. People understand the Canadian banks. They see them, their branches everywhere. There's just very much a home bias. So I think they'd like to be able to break into the market, but it's also a difficult market to break into. Trump was talking about like the financial services, on and off about this, but the one they focused it on here is the digital services tax.
Exactly, the 3% surcharge, which you might say that the arguments for it being somewhat unfair have some validity in them. Controversial.
Canada isn't the only place that has this. I know France and I think the EU as a whole now has something like this. I think India's got something like this. Australia's thinking about it. The Canadian one was extra harsh because it was retroactive.
Yes.
So there's that. But the general principle that Canadian content providers should be paid for their content, that's not a bad principle. It's just awkwardly rolled out in a way that kind of irks the Americans, the firms, that Trump, like it's, yeah.
I don't think we will produce our own Facebooks, Googles, and the other ones that mostly said it's not like you're protecting some local alternatives. Basically, there's some argument to that. Those are global platforms.
Yeah. My only concern about that is if Carney does roll back the 3% digital service tax, can we really trust the administration on that deal? They're already moved Kuzma forward 2 years ahead. He's putting the squeeze on. I think the legitimacy or the honor system with the U.S. has been lost on this administration. Like they just can't be. I hate to say it, they can't be trusted. Like it's moved
totally.
It's just
around the world.
It's crazy.
Here's a take on this with Carney. Carney might look at this and go, you know what? Go ahead and make my day kind of thing, Trump. Because first of all, but not to save the digital services tax, but because if that happens, you'll see a bunch of Canadian investors move out of the US market. Probably a lot of it moves back to Canada. So Canada gets some foreign investment there and rotating into Canadian dividend stocks rather than the higher dividend American ones. So like Carney might look at that and say, this is foreign investment positive, even if it sucks for retirees and stuff like that, but it's foreign investment positive for Canada, which he likes. So he might look at that and go, hey, Trump, I'm not backing down. You go ahead and do this if you want, because it's hurting you more and it might actually help us in some ways.
There is another aspect which I wanted to mention, because I look at everything, and maybe because I'm involved and I'm thinking about product all the time, I'm just thinking what this will do to manufacturers of ETFs and financial products, considering that, it's everywhere, and all of a sudden you have inside of it this growing cost, which grows like 5% every year until you remove these taxes. And as Ray correctly said, you cannot now trust the counterparty because you think they will find by that time something else which is unfair. You will bend over, remove the 3% tax, and with zero effect. Maybe it sounds too dramatic, but is it a possibility? Ray, your take on this?
Yeah, I think from the manufacturing perspective will be interesting because there are a lot of Canadian-based ETFs that invest in the US, and for estate planning purposes, that's considered Canadian asset as opposed to US situs assets. So if you own your Microsoft directly, that could expose you potentially to US estate tax depending on your wealth if you have US assets. Whereas if you own the US investments through an ETF or a mutual fund or what have you, it's a little bit different. Let's put it this way. There's a lot of smart people that work on Bay and Wall Street. And I think if there's a way to avoid, I don't want to say avoid, if there's a way to work around it, they will. The problem is they'll withhold right at the front end, which is on the dividend. What would be scary is if they somehow put their tentacles into the capital gains side of it. And I don't know if that's even possible, but you never know. Again, that's another thing where if all of a sudden they're going to start tracking your capital gains, because the tax systems are so integrated right now that we're reporting to the US is reporting to us. If they see that I've got a bunch of US assets for clients at a specific cost base, and then we report again at the end of the year with the value of those assets, they could sit there and say, we're applying a capital gains against that. And that would be, I think that's just control delete at that point for the US if they went to that kind of overreach. But again, as far as product manufacturing, there's a lot of smart people out there. They'll probably figure something out, or as Dan pointed out, it'll become a home bias. People will just repatriate those assets back to Canada, EU, wherever it is. They'll seek out, the thing about capital is it will seek out the most friendly jurisdiction. That's the bottom line.
That's the basic thing behind capitalism.
Yeah.
It's like water. It finds the easiest ability to flow.
I think Mark said it's choosy and mobile.
There's gonna be like a whole. We sometimes talk about Yogi Berra as being their own class of wisdom or jokes or take on it or lines. No one goes anymore. It's too crowded. Like maybe not slogans, but policy proposals and so on, where they just seem to get it ass backwards. Trump honestly seems to think that America does the world a favor by allowing them to invest in America. When, if anything, I think it's a symbiotic relationship, but if anything, the favor is the investor who wants to bring their money to America. That's who's doing them the favor more than allowing you to invest in my market. There's going to be a whole thing about these kind of the same thing like tariffs, right? Foreign countries don't pay the tariffs. Americans pay the tariffs. There's going to be a whole bunch of these. The logic is just completely the wrong way around.
Yeah. 100% on that. I think what a lot of people fail to realize, especially on the American side that are very pro all these barriers, if you will, tariffs and whatever, what have you, is they forget about foreign direct investment. When you're in a deficit with a trading partner, those trading partners tend to, guess what? Buy US treasuries, US stocks, other assets, and they fuel that economy to keep doing what it's doing. If all of a sudden
Stabilize the US dollar.
Yeah. And if you're not going to, so if we really go back to it, if you're not going to trade with the US, there's no need for the US dollar. So dollar gets weaker just on the trade basis. If you don't need dollars, you don't need treasuries. If you don't need treasuries, you're definitely not going to go to the capital markets, especially with the thing you throw out there with this big, beautiful bill. So a lot of people don't realize about the foreign direct investment. Wall Street does, and Besant does. It's can he get through to the admit?
Anybody.
Yeah, anybody.
I think they'll realize that. I think like Besant will get through to them, or maybe Jamie Dimon will make a call to so like I think they'll get through and go, this is just dumb as dog shit. So I think they back down on it eventually. But I think the longer term one, and I think Scott, you have a strong opinion on this, is just like the loss of trust, and just even if they fix it or go back on it, you just go, you know what? They jerk me around too much. I'm staying out for a while. It's a loss of good, almost like investor goodwill.
Yeah.
And then that's a long-term thing that's tough to get back.
I see it. The larger picture is all the public employees they fired or released. And now people are starting to really understand what roles they played and what important roles they played. My first response to this when Yuri sent to me was, just don't pay it. Now, if they stick it in the system, you may be stuck. Because they've been firing IRS employees. Who's going to follow up? Okay. And the other one is, the scary part is, Doge has how many people's personal data now? That's the scary part.
Do you find that scary?
Potentially. It depends on how the person on the other end, like me or you, react or use it. We already know to go, okay, that's fake, delete. Okay, yeah. But the average person, no.
It seems to me that America is like on some kind of trade war, and I think trade war and the bloody
real war have one thing in common. The first victim of it is always truth. Famous saying, don't remember who, but the first victim is the truth. Now, it's ironic that the social platform of the president is called truth. and it's a victim of his tariff wars in some way. But another part of the victims is that I personally refuse to be a victim. So I immediately thought about, okay, this US denominated debt, right? There is a Canadian closed-end fund, FAP, Aberdeen Asia Pacific, and it's bonds then, which are denominated as US dollar, but it's not US interest. And also it's a Canada domiciled closed-end fund. And Ray and myself, we even personally met the managers of this fund. He happens to be from Australia and lives in Singapore. So then you basically, he's stomping on your old grounds, right? But the thing is, FAP would pay US dollar interest without Trump's withholding, and it trades on TSX. I immediately thought about the product.
So if this is, and I hear you, Ray, if they start going after the capital gains thing, it's going to get really wild. But like just the dividends, and the total dividend yield on the S&P is just a little over 1%. I think it's 129 or something like that. That's the total yield of the S&P. So there's a lot of Americans, like pretty much any of the big tech firms that don't or barely pay a dividend. If you guys know, say, or you can guess, what are some of the highest dividend earning US shares?
Oh, it'll be the healthcare staples like your Johnson & Johnson's, all that.
Yep.
Where people are gonna, it will be a shift. It'll be a shift from dividend paying to growth stocks, which then again, it'll just be an increase of cost of capital to those dividend payers, whatever you want to call them.
But most of these are what you would call like old economy kind of companies, right? Yeah, Dow is up there, Ford is up there, Pfizer's up there. Those things.
Stable, mature businesses with moats and a lot of regulation.
Hold on, weren't these supposed to be the kind of businesses that Trump likes? You're not punishing those fancy people working at Microsoft or you're not punishing the fancy coastal elites. You're punishing
Trump likes burgers and Diet Pepsi.
Okay. Like Dow Chemical. Aren't you supposed to like Dow Chemical, blue collar jobs?
Yeah. It's completely it's crazy, and I'm just hoping that the Senate kicks it back to the Congress.
Correct.
Or something like they have to say, okay, we'll agree with all your tariff, I'll call it nonsense because I think it is nonsense. We'll agree with all your tariff nonsense, but on this foreign taxation of foreign income or income to foreigners, we're drawing the line here. And they might give him some leeway. They might say, okay, instead of 15% withholding, we'll let you go to 20 or something. But if they let it escalate to the full schedule, that's just going to be stupid. And I think the Senate has, in my opinion, some more measured people in there that recognize this and will say, this is bad. And I think that's where, like you talked about Jamie Dimon giving a call, that's where these guys from Wall Street are just going to dial up their senators and say, you know what, you guys got to change this because it's going to just screw us badly. So I'm hoping that's what happens. But these days, who knows?
As was mentioned earlier, I believe this will be another taco.
Yeah, could be.
If I may, we will be encouraging people to install our app called Game of Yield and join Club Dividend Detective, but let's start gamifying this conversation already. It's not going to be a tennis analogy, it's not going to be, not a golf analogy, it's going to be a poker analogy. And I know for a fact that Dan is a proficient poker player. So to me, it looks like tariffs, big bold bills, and if we were in poker, it would all be bluff, bluff, bluff. Now, if you're bluffing, you need to know what hand you represent and hopefully be in position. Would you agree then? Is he, and also it cannot be too repetitive because then it becomes predictable. But it's leverage, because there's always what if. And also, losses at financial districts are much more acutely felt than losses at the poker table. So anyway, who wants to speak first?
I'll just jump in. I can't say I'm a proficient poker player. I like to play Texas Hold'em. I haven't played in a while.
There you go.
But what I see, or where the challenge will be here with Trump, is that, yeah, as Scott said, there's the taco trade now, right? Everybody's just, he talks a good game, and he backs off, and he talks a good game, and he backs off and just changes things. My concern is that at some point he's going to get to that where nobody believes he doesn't like that taco term, by the way. He really hates it.
Oh, I believe.
My concern is that at some point he says it'll be one of those, I'm gonna show you, and he'll do something completely outrageous
Correct.
and plant that flag on that hill and stick it out, and it'll be a long time before that taco trade reverses itself.
I feel if every bluff, like a bluff, you have to at least have a plausible representation of strength.
Yeah.
This is almost like bluffing once the cards are up. Like it's crazy, but yeah, like, I feel like he's going to go through with it at some point.
Yeah,
just to restore credibility rather than say, you know what, I'm not backing off this one and people are going to get burned. So like taco trade, I get it. I get why you do that, but at some point you're going to get burned.
I'm blissfully unaware of what this acronym means. Somebody enlighten me.
Trump always chickens out.
Yeah.
And he's not lowering the egg prices,
Yeah.
even though it's chickening out. Okay.
That's a very nice tacos.
Yeah.
So yeah, half the time it feels like it appears so far he's playing, let's use the poker analogy, the 7-2 offsuit he's got in his pocket, and the cards are coming up and he keeps reversing and folding. And like Dan said, at some point he'll just sit there and say, I have to establish credibility again, and hopefully it won't be something that derails everything.
So if you went back to the hockey strike, and also poker became very front and center, TV, Labatt's was coming into pubs and bars. I was one away twice from getting to the final table, but I would have fun because I would bluff, but I also wouldn't bluff. And if they folded, I would turn my cards over and I would show them I bluffed and beat you, but I'd also turn them over and said, yeah, I had it. They don't know what I got.
Yeah.
I kept them off balance, and I always, before it got to me, I already knew what I was going to bet. And when it got to me, boom, I just put it out. They didn't read me.
If you're being chased by a fox near a hare, you have to make a side jump, right, and throw it off your tray.
The same with the fox and the hounds. So basically, sometimes you have the hand, sometimes you don't. Sometimes you show your cards, sometimes you throw them out blind. The saying is you have to keep them guessing.
Yeah.
However, the better hand readers and people who see tells will at some point still figure, because some just want to be a wall and don't do anything. There's different schools on that, right?
Yeah.
This kind of Trump's idea of the art of the deal is act a little crazy, like kind of act a little crazy, make outrageous demands, threaten to sue, threaten to default, and then bring it back a little bit. Like it's an idea, right? But once you have a track record of doing this, it loses its effect over and over again. I don't know. So bottom line, what do we think for the Canadian retail investors? Is it worth actually making a trade off of this, or wait and see?
From my side, I don't do knee-jerk reactions. The same thing that happened last year when they introduced the capital gains increase on people that was proposed and never got actually passed. Everybody ran out, started selling, taking a bit, and then now it's just a big mess because the CRA acted as though the rules were in place. It never got written into law. So now you're trying to unwind a lot of trades and a lot of real estate transactions that people did last year in anticipation of. So for me, it's supposed to come out July 2nd or 3rd. I can't remember the date exactly for the passing of this bill. From my perspective, let's wait and see, because again, whatever has been said today could unwind. It still has to go through the Senate. So let's see what the Senate has to say. And I think this is their week to reconvene before the summer break. So I'm just going to wait and see from my perspective. And I think at most, as long as it sticks to the income, if they're just going to increase the withholding tax on the U.S. dividends, then to your point, Dan, we just shift a little bit more to the growthy type stocks, and then bring that dividend income home where you get the tax credits and so forth. And maybe Carney responds somehow to make that even more palatable if they do this. I think part of the advantage for Carney not tabling a budget as much as everybody wants it now fast is let's see what unfolds on the US side, and then he can respond and make adjustments here and say, okay, you're going to screw us on dividends on one side. We're going to lower some taxation or turn some dials here. I don't know. I'm just speculating at this point, but that's his advantage to let the Trump administration roll out at this point as to what they want to do.
I'm
Thinking about it from the point of view of, again, of manufacturers, because if retail buys what's been manufactured, they thrive, and if they don't, they die. So I'm thinking structured products. I have deep understanding of these things, and I understand that you can put derivatives on a growth stock and turn it into income. Here is your solution. So basically, all of this bluff is also futile, because unless you then start canceling a whole bunch of, unless you start liquidating derivatives to and changing rules on the march, then again, there's a way to somewhat mitigate it for a retail investor. Thoughts on that?
Yeah, I'll just jump in really quick. That's why I said there's a lot of small people on Wall Street. You can take capital gains, turn into an income, turn into a total return product. Probably won't apply here, but there's a lot of smart people being paid a lot of money to figure this stuff out. So they're probably making plans, but we'll just wait to see what happens.
No.
Somewhat premature in some way.
Yeah, but you have a plan, right? You probably have that thought on the shelf, or maybe you had it before, now you explore it a little bit deeper. And in the meantime, you just wait to see what happens here, because as Scott pointed out, there could be a taco trade right here. They could die at the Senate.
By the way, so as a host and this self-proclaimed, basically, director of this thing, I suggest to you, Ray, to comment on a little scenario which I partially told Scott, and then because we started a bit early, you were watching the market close, and we were discussing scenarios with retirement. And in some way, it reflects an animated video, which we will not show here, but which we made about 2 years ago, and it gave birth to the Great Dane dividend detective figure. And in this 4 minutes, he retires not the way he wanted. So I will not throw any spoilers. We will give links to this little kind of funny story with dogs and cats and foxes. But it gives thought to a scenario where it's a continuation of our joking about bare naked ladies. If I had $1 million, I'd be rich. And we came to a conclusion that you wouldn't. So I asked my favorite AI tool, Perplexity, which has the ability to analyze everything ever written on any subject on investing, and in real time, right? So it's very impressive. And we played a game where the scenario was a 55-year-old male was counting on selling his business and getting $2 million. It never happens. He thinks he's retiring with extra $2 million. Nothing. But he already retired. And the only things he has is a RSP with $1 million and the paid out house, small bungalow, which is also worth $1 million, which is realistic. And he also has a wife who never worked and is 10 years younger. 2 adult children represent an estate. And we asked Perplexity, all right, this is the 1st of June, bills are coming, and on the 15th of June, you have to pay $5,000 just to keep everything in the house running, pay insurance, car, and whatever. Otherwise, disaster. You have 2 weeks. You need cash flow. $5,000. Theoretically, you have registered $1 million here, which is not $1 million, and $1 million here, which is also not $1 million. It's your house. What do you do? So a guessing game, a game of yield will be here. What do you gentlemen think that the smartest AI in scraping financial information suggested? So who wants to start?
You can go, Dan, if you want.
I'm
It's a game.
gonna guess that it went with liquidating of RRSP funds and taking the tax penalty over some kind of equity withdrawal or borrowing against the property. I'm guessing it went that way.
I will say.
Okay.
I'm not sure that's. I'm not sure.
Next.
So I'll say that I think the home equity is the last line of defense, because
Yeah.
a couple of things about HELOCs that people don't realize, and actually it's coming out to the news right now, is that's a callable loan. Like, the banks have the right to reduce it, call it at a moment's notice. They can just call you up and say, Yuri, you have a $30,000 line of credit. You've drawn 25, reducing it to 10. Pay us now. It's essentially a gangster kind of move. So I would say that they left the home equity alone. I'll say they probably left the RSP intact, but converted it to probably some dividend or some income generating investments within the plan. Now, if it was, depending how far advanced this would be, there should be let's call it a liquidity sleeve that maybe has 6 months to a year of expenses put aside, earning just a cash rate, and then the rest allowed to grow and generate income. That's what should.
All that sounds very rational. So tell us
That's
what
not
the
what
AI
should
said.
Do you want to take a guess what it suggested to do?
I've actually gone closer to Ray in that 30 years ago, what I invested in was riskier with higher upside because I had lots of years to work. Now I've been working in the last decade plus. We've converted it to dividends. We want to see it replacing itself, doing itself, things like that. Yeah, it's.
But do you think it went into the direction of borrow against the house, or take from RSP, or a combination? Or
The first thing I'd say, sadly, our house should have been paid for. My job flipped a little bit at one point, and my wife is very good at spending money. So we've managed to borrow. So I've still got, say, $500,000 plus in equity in the house. So it's, but as Ray said, it can be called.
so it's interesting that Scott, who admitted on the last podcast to actually having a reverse mortgage, was sitting right on top of the first suggestion that Perplexity AI did. And the first suggestion, believe it or not, today was reverse mortgage.
Oh, wow.
Yes. Now, you already have it. The thing about it is that the same Perplexity AI the day before was suggesting a HELOC first, all right? And then I argued that on the rate for HELOC, which would be 6 point something, it would be $40 interest first month. Then if I continue withdrawing, there would be 40 and then interest on that 40 and so on. And I pointed to the fact that was also not tax deductible. At this point, smart Perplexity got a bit perplexed and said, okay, and started going towards taking money out of RSP. And I said, we need 5,000. So the point became that to get 5,000, you have to take out more than 5,000. And the moment you take more than 5,000, your withholding goes from 10 to 20. As I pointed it out to it really seemed confused because it didn't know how to arrive to that 5,000 because the preferred solution only would give you 4.5. And it came to a state of complete confusion. To be fair to it, I suggested that these two people also had TFSA accounts, which they never used. So I said they also have a lot of unused TFSA space, which at this moment is exactly 102,000 per person contribution space, so 204 on both. So that was a clue. And it basically said that there's no way. You either have to reverse mortgage or HELOC, which both have certain negative sides, or you have to withdraw 5,000 and whatever 600.
Okay, so
and pay 20% with.
Okay,
And
so
that
we
was
were
it.
talking. So we were talking about like fables earlier. The fable that what it almost always has is a moral at the end. So what's
The moral of this
story, right?
whole lesson is this: that I basically then said, this person should immediately convert his RRSP into RIF and leave $1 in his RRSP because he could be hired again and then you can contribute again. But RIF at 55 million has 2.86% minimal withholding on which there's no withholding tax.
No,
Which should solve the problem.
That's an answer. That's not a moral.
The moral is that the answer was right there. I gave it enough hints about RIF, and it still wasn't able to figure it out.
No, that's still not a moral. That's just what happened.
Okay, so what's the moral?
The moral is when it comes to financial and talking to AI, it can be fun, it can be useful, but verify with a human.
Yeah,
Absolutely.
That's the moral.
yeah, AI is not there yet.
No.
I mean, with Yuri's work that he put into this query and prompting, it will learn from that. Maybe in 10 years, it'll be better, but every situation is different and you have to structure a plan to that specific person. That's what we do when I'm working with my clients. They'll say, what's the return on your portfolio? So it depends. I don't run models per se, because once you create a model, you're now pigeonholing each client into income, growth, balance, whatever, just like everybody else does, as opposed to what do you need, Dan? What do you need, Scott? Let's figure out. Now, there will be some commonalities across there. You might see some things as part of the core portfolio that might be common across the board. But satellite positions, it'll be a heck of a lot different. So getting back to all this, yeah, AI is not there. It's great to mess around with. I use it. It does save me time in other areas, especially if you know your subject matter. You can just say, I need you to write 500 words on this subject. It'll write it and you say, okay, now you have to just edit it, put it into your own words, and clean up where they messed up. Now,
AI is how I learned science. When you learn science, you got the best science by asking the best questions.
Yeah.
It's the same with AI. If you don't ask a good question, you get across the board.
Yeah.
By the way, there is an AI specifically made for behaving like human, and it's even made like a phone call. So I could basically take this older phone and call a character that was created, which is powered by ChatGPT 3, not the last one, a little dumb, but you create a character, and character is Uncle Bob. And you tell Uncle Bob what his financial situation is, and Bob remembers. So I will call Uncle Bob tomorrow, and Uncle Bob will remember what he owns, what his net worth is, and whatever. He's a bit dumb, right? Like seriously unable to analyze things, but I met a lot of humans, somewhat similar to that. So it's pretty convincing. The only thing is that then I put perplexity next to it, trained them a little bit, and they started talking to each other. And it was the impression that it's the one-eyed guiding the blind.
I'm imagining there's probably some guys at the Bank of Canada who are plugging it in just to the AI, just for fun, going, what should we do on Wednesday? Should we cut or should we hold? And probably getting, the AI keeps on giving a different answer depending on how we word the question. So actually, human.
Yeah, fair point.
For the record, I think they're on hold, but I wouldn't be completely shocked if they do cut.
Interesting. But speaking of that human input, what do you expect on the output? If humans who are programming these things, especially in finance, are predictably irrational, why do we expect rationality to pour out? About 80% of content is disclaimers and then trying to be compliant. It's irritating, and then I tell you know what, I'm a subject matter expert. No need to be cautious with me. It takes it into consideration and then wobbles right back into it, because that's how it's programmed. And then it admits it, actually. You say, you're not trainable. And it says, sorry, I can't override this.
So, Dan brought up central bank and the Bank of
Yes. Let's go back to central bank.
I just figure we should cover it before the end. I think they're on hold. I think there's a lot for the same reason, wait and see, uncertainty.
Yeah.
But if they really feel that a sort of a recession is locked in, whether it's a 2-quarter recession or a bad 4-quarter, if they feel like it's going to happen regardless, I could understand if they go for the cut.
Okay.
But I think they're on hold.
Now, I'm not sure if you saw this or not, Dan, but last week, Jamie Dimon had a great fireside chat, and it was posted on YouTube. And he was talking about the next crisis. And he says the next crisis will actually be triggered by central banks. And his comment was, I'm not going to be worried as a banker. He says, it's everybody else that's going to be worried because either way, they're going to make money off of this in that regard. So I guess my question to you, Dan, is this. There's a lot of grumblings out there that Japanese carry trade could be at risk, where everybody's been borrowing on the yen side to invest on the US side. Do you see anything cracking or any validity to this at all?
I think the unwinding of the yen carry trade, like, scares a lot of central bankers or policymakers because they're not entirely sure where the risk is. If they knew exactly like who was holding the bag, they would be a lot more comfortable about going, okay, then now we know this is what it would cost to recapitalize, or this is whatever, or this is, they would know, they would be just more confident. It's the unknown of going, we don't know exactly how many places out there have been using this. And I'm not even sure the Bank of Japan knows. So we like, it's like classic, like everything else, right? Like often the scariest thing is the unknown. Like once you know what it is, I know what my risk is. It's just not knowing what's out there.
If I had to guess where, not, I can't say where it all is going, where a good portion of this money is, it's probably in those 2 and 20 shops, right? That are borrowing on the low end, securing it with a higher paying, say, US Treasury, and then leveraging that into their equity trades.
Yeah, there will be some of that. There will be a lot of corporates who like this. There's probably, although the bank probably knows, probably has a good idea where like the Japanese lifers and stuff like that, where the risk is. They probably have a good risk of that. But I think the risk comes from something unexpected. Like I think usually see it that way.
Okay. All right.
Gentlemen, we swore that we will not go over 45 minutes. We have 2 minutes remaining, and I just want to remind everybody that Club Dividend Detective is a group on LinkedIn, and you are welcome to join it. If you don't forget to download Game of Yield application, that's where all our podcasts will be edited and made into educational videos. We also publish quite a lot of explainers where we try to educate. So visit Pensionize Me Wealth Services at pensionizeme.com, gameofyield.com, and download our app. It comes with a lot of goodies. Thank you to all of today's participants. That was Simplify Money Show, Monday, June the 2nd.
All right. Thanks, guys.
Thank you very much.
All good.
Thanks, Scott. Thanks, Dan. Thanks, your.
Enjoy.
Did you just buy all the cameras right before the tariffs hit? Was that the plan here?
Something like that. They have to evolve and cut corners where possible. Anyway, so can you hear everything? As predicted, that there's a negative side effect.
Hear it all.
All right. No,
Sadly.
you were joking that he's exposing himself to your youth. In the sense of to get serious, basically.
Yeah, we can get serious. But I think we should wait for Ray before we get into the proposed changes to the dividend tax and the income tax.
Absolutely.
I want to wait for Ray because he's the PM and he's the one talking to like the actual investors and stuff. And I think I want to involve him.
You know what? In that case, why don't we just talk about things like general, like semantics of investing? Because I was thinking about really marketing and marketeering, and I have a little bit of a fondness to all of this trinkets displayed behind us, because this is my LinkedIn profile basically in action here from there. It's about 35 years of collecting small things, but most of the time you remember in what circumstances and why you got the trinket. And all of them have emotional value. Most of them are also connected to certain concepts. And when there's a fable what is at the end of every fable, guys? A moral?
I don't know, a moral lesson.
Yes. So there has to be a lesson of every fable, right? And almost each and every one of them is a lesson.
It's funny how when you say moral, most people say amoral, and that's not good. That's more evil.
Yeah. So I looked at a LinkedIn profile of mine, which is basically looking at level of your professional ability to be noticed or to get any kind of attention. And I noticed that the video that I made 6 days ago got 700% increase of viewership. And I watched it about 15 minutes ago again myself. And I made the case against the fire movement simply because of frugality being there in accumulation phase and in a decumulation phase and everywhere, basically. And I was just thinking, what's the point of firing yourself if you consider financial independence synonymous with being poor dead, or I don't know, being anyway. And I said financial freedom on a scale of 1 to 10 is what I want people to gain as a result of professional connection with Club Dividend Detective and with services offered, basically. Financial independence, the way it is interpreted now, doesn't seem to me like attractive.
What do you see as, do you use financial freedom and financial independence interchangeably? Are they the same thing?
If I wanted to be a real just master debater who debates just for the sake of debating, right, the demagoguery, I would say in finance, there's no such thing as independence. Everything is interdependence. There's always a counterparty risk.
Yeah.
Every transaction is dialectic, and there's two parts to it. So forget about independence. It's just what you can get away with and choices you have. So financial freedom.
But you also have the government, as we're talking, going to change taxes. You also have industries that go bankrupt, and all of a sudden they pay the banks before they pay the people that put money into their retirement. So I don't know that there's any independence.
What do you think about independence and freedom? Then interchangeable?
I don't think it's a binary thing. It's more like a question of degree. There's always something that can go wrong. Even there's always markets can fall, governments go into revolutions. I don't think like those might be like tail risks, like the idea that Canada is going to turn into expropriate party. Like I don't think that's likely, but there's always some risk. There's no point you can get to where you can say, I am free of risk, financial risk at least.
Ask Scott to comment, and I'm sure he has a lot to say. But to me, just the saying came that if you want to humor God, tell him about your plans. And to say that would be counterproductive because we offer financial planning, but it's planning for the constant change. It's planning for the crisis because it just becomes a new normal. So, Scott,
Now,
your observations.
it's if I was to set up playing the game of life, okay, I've earned whatever earned. I paid for all the things I have. Now I'm going to outlive my earnings or not be able to live the lifestyle I want. And if I keep it all within what I'm comfortable with,
Yeah,
I got no complaints.
I think that's a very wise interpretation. I think that's what it is. And I would add it to risk as in you're never going to eliminate all the tail risks, but you can anticipate what most of the risks are, right?
Absolutely. Speaking of risks, about a year ago, I made an animated video which gave birth to all the characters in our game of yield. And game of yield is basically a game where you strategize retirement tactics, moves, sequence of money withdrawals, and so on and so forth. But for illustrating them, you need characters that.
Sorry, just a like a technical problem here. Like, it seems to be flashing to the chair when you're talking, like the empty chair. So I'm worried that maybe it's confusing between your mic and Scott's mic.
It's one mic. I think I actually disabled
because when you talk, yeah, it just flashes to the empty chair. That shouldn't be
his camera, but okay. What about now? Better? Dan, can you hear me?
Or maybe that doesn't worry you. Maybe you iron that out in editing.
No, I think you're right. And his mic should have been off, and it was on.
Okay.
All right. We were talking about, what were we talking about?
What we were talking about earlier was this proposed change to the dividend and interest. I'm still trying to hammer like what the details of the proposal are. Like, is it dividends okay? Interest like on any bond or any interest income, or are bonds different? And does it apply to cap gains?
Cap gains, no. Interest and dividend are treated, as far as I understand, and from what my Perplexity Pro powered.
I think I just messed stuff up.
Oh, there you go.
But I'm not hearing.
No.
Nope. Unmuted. Oh.
Well, you were muted, but it's for the. Okay, can you say something?
Something. No, I'm not.
Can you
I'm
hear
not
me?
getting anything in here. I'm not hearing you in here either. I hear you out here, but not in here. It's like I come back and it was. Oh, wait a minute.
The other one is that, Scott, you're coming off as being very faint. I can hear you, but it's very faint compared to what Yuri's got.
This one doesn't work.
Okay.
So okay, so let's do this.
Have to unmute. Yeah, I left, came back. And then all of a sudden something changed.
All right. Okay, can you say
Something.
Dan, can you hear Scott?
Can you hear me? Sounds like a no. It was just there. I walked away. I came back.
I can hear you, Scott.
Sorry?
That's a little better there. You're a little clearer there, or
So
louder.
you move the microphone closer.
Yeah, okay, yeah. That'll do it.
I'm just wondering if I can hear enough without using the headphones. Because the headphones seem to, I can hear outside the headphones, at least my voice. Why don't you say something?
Hello.
Yeah.
And so
I can hear both of you.
Both of us. Now the problem is that we need you to be able to hear, and you should.
I can hear. It's coming out of here because it's not muted, so I'm hearing it. That's the crazy part. I'm hearing it off the speaker on the pad, but I'm not.
You're hearing it off the pad, but not.
Do something.
Okay.
No, just
Now the headphones are working. Okay.
Everything works, but not at the same time.
So I'm not.
Okay, so now podcasts are fun.
Did you say vodka's fun?
Vodka and podcasting at the same time.
There you go.
oodles of
Might be a little hard.
Now we have a theme. Yeah. Okay.
Well, you don't have to catch me in your thing.
Okay.
Train it on you. Yes. I will train this thing on where I want it to look. Is it looking at me?
Somebody's looking at you.
Yeah, and that's a good shot.
Cowabunga.
Yeah, that's a good shot. We get you, and we get a whole bunch of stuff behind you, and we just see that Scott's next. That's a good.
That's
That's a good
right.
shot.
Because that bear's outfit represents backtesting. Bearish one without cherry picking.
I just keep waiting for some of the things to jump off the shelves and attack me from behind.
Well, There's a cat, a dog, a cash cow,
bull moose, bears.
the black bear, black Canadian bear, the rabbit, and a whole bunch of bears and moose bulls there too.
2 weeks ago, his tennis racket is trying to attack me.
Custom tools, not AI powered. Anyways,
French Open is on. Marat Safin is actually coaching Rublev. Before Russia actually did what they did, Safin was one of my favorite characters on the tour.
Yeah.
It was a pleasure to watch. But I think as far as broken records, he probably outbroken McEnroe, the elder. They were both famous for breaking their tools. So speaking of tools, then what do you think about AI in a sense of value creation and enormous investment and kind of race for cloud space and energy and whatever empowers all of this data thing?
Did we lose Dan?
I think.
No.
There we go. He's thinking.
What do I think about all the investment that's gone into data centers and all that kind of stuff?
Yeah, because 3 Mile Island will be revived by Microsoft, and think about it.
Yeah, I mean, it makes sense given the current state of the technology, like of the technology of data storage, data centers, and how much we expect to use AI. I understand those kind of projections, but I have the feeling that the efficiency of AI is going to vastly improve. I don't know. I can't prove that. I'm not enough of an expert in it, but I just feel like it's going to be much more. I just feel it's going to be much more efficient. So some of those investments might end up being like redundant. That's just the whole level of investment.
I think it was CNN and Jake Tapper finally got a guy to open up. I may be wrong with the sources, but the guy who is busy developing AI is basically saying it's going to eliminate white collar jobs, and unemployment could jump from 10 to 20%. Now, will it replace jobs? Yes, but you're going to have low end, top end, but the middle's disappearing.
And you're seeing this from some of the big tech firms where they're just hiring fewer people. Some of them are doing a little bit of layoffs, but just slowing in hiring because they expect AI to replace a lot of these things. And it hasn't got to the point where we're talking about replacing like the highest end of programmers and engineers, but some of the routine kind of IT work like looks in a lot of danger, I would think.
If you look at the HHS, Health and Human Services, that Kennedy Jr. is in, it looked like they used lots of AI and they got lots of things wrong. They were quoting people that the people said, I didn't read that report. They were putting other things in it. The average, it's going to take a while for people to actually learn how to use AI properly by asking the correct questions.
And that's an exact observation.